So we've heard a lot over the last couple of days about what the economic policies right now have meant and will mean for the economy. What does it look like from your seat in markets?
Well, I think the investors have had to absorb a lot of news and a lot of changing news. So you're seeing that obviously manifest itself in the markets. It has been an incredibly active period of time in the markets. We just had earnings yesterday, but we had our thank you. We had record volumes within our markets in the first quarter, and then in the first 10 days of April, we had 5 of the top 6 trading days in equities, 4 of the top 6 trading days in options ever in the history of markets. And on our peak day, we also really evaluate message traffic because you have to look at how many messages are we managing through our systems. And we had 550 billion messages flow through our system.
And what are those? Buy, sell?
So they're all the orders. So you think about all the orders that come in, all the orders we send out, all of the messages we come in, so orders turning into trades, and then also all the message traffic we send out to make sure that all the market data feeds are working. But what's happening there is that in equities, you have about 4,000 listed companies in the United States. But in options, you have 1.5 million strike prices against those 4,000 equities, right? So every time an equity price moves, all the options markets have changes in their strike prices. And that just creates a massive amount of message traffic. But why that's important is really to understand that the inner workings of the markets, the inner workings of the financial system have really worked really well. The resilience of the U.S. market structure and the market infrastructure has been incredibly resilient through this period of time. And I think that's something where people don't really think about it, but it is such an important part of making sure that as investors are changing their positions and as they're managing through all the news, that they can do that instantaneously in a frictionless environment. I think the entire industry's done well, and of course I think Nasdaq's done well through that as well.
The word we keep hearing is uncertainty, which is certainly bad for business, though not actually necessarily bad for markets. I think some folks in the administration have said that this was a bit of a clearing of the brush, maybe, that some stocks had been overvalued, that the market maybe needed to be reminded that stocks go down and up. What do you think about that?
Well, at the end of the day, what investors look for is some level of predictability. And any time you have a period of time where there's not a lot of predictability, the first instinct of an investor is to go risk off and to kind of take money off the table, sit on the sidelines, try to understand what's going to happen, and then start to redeploy their capital in a smart way into those companies or sectors where they think, okay, this is going to be resilient. This actually could be a really interesting sector to get into. This, maybe I'll stay away for a while. But that takes time. And usually it's like this moment. It's like at the beginning of COVID, you saw a massive reduction of risk at the very beginning of COVID. And then you saw monetary action happen. And that allowed people to say, okay, wait, I think this actually could be an interesting period of time. Not every company is going to be affected the same way, so let me start to redeploy my capital into it. But it became a little bit more of a known environment when everyone realized we could actually operate really successfully remotely. We could figure out the world around us. I think right now we're in that midst of what is the world going to look like? What is this going to mean for rates? How are we going to be able to operate in this world? Where are the demands? Where's the demand? How's the demand going to change? And none of that is yet known. And so that is where we're in that kind of swirl right now, where investors are just trying to get to a point of predictability. Predictability is what really drives the economy forward. And so, yes, there's moments in time when this activity level could be, beneficial to market operators. But at the end of the day, I think we all prefer a world where we have predictability.
Where are you seeing money go? I mean, utilities have had a great run, right? There's some sense that there's some defensive sectors that are starting to outperform. Are you seeing money go in interesting places, or kind of where you'd expect to see it?
I haven't seen anything unusual. I would say that also there are a few things to recognize. Technology is an unstoppable force, and I realize that they're going to be what's going to happen to the overall demand structures around the world is something we're all trying to figure out. But we also are in a mode of modernization. So every industry, every sector, every company is looking to how we can define ourselves in the future. How can we bring technology into our organizations? How can we modernize our infrastructure? That's an unstoppable kind of just trend, a long-term trend. Now, how people kind of allocate capital in the short run might change and shift. But the fact is that if we look at our own business, we have a very scaled fintech business today. We did announce in the first quarter we had 10% growth in that business. And the clients, because what we provide is mission critical infrastructure, very modern. And we'll talk about our new partnership with AWS in a minute, but it's a very modern way to manage risk, to manage their market interactions, to manage markets. Those conversations are persisting, right along track because of the fact that there's so much of a need to continue to modernize your infrastructure. U.S. is the home to those companies that are really helping the world modernize. So it's going to be interesting to see how that, kind of that underpinning of demand we see is, persistent. But I think that, within other sectors, that it is going to be also the news of the day can kind of move a company in the short run. Over the long run, though, I'm a believer that the U.S. economy, I'm a believer that a lot of different economies in the world are going to demonstrate that we have strength, we have resilience, and we are, particularly in the United States, really driving the future of the world.
You've got a big financial crime business. Preventing it, not facilitating it.
Thank you.
Important. As geopolitical tensions rise, is that something the U.S. financial system and financial players should be worried about, that they become a soft target?
I think that the financial system and the banks, every member of the financial system absolutely recognizes that they have to have incredible defenses built into their systems. And one of the things, certainly as you've seen in terms of the world and the risk of cyber and other things, the financial system is very much on the forefront of those defenses. And I think we're extremely modern, we're extremely advanced in how we manage that. The same thing goes for financial crime. What we mean by financial crime is criminals trying to come into the system and either steal money by defrauding other consumers and certainly trying to defraud the banks, trying to defraud consumers that then use the banks to deposit or withdraw money, and then also criminal networks, terrorist networks, nation states, other groups that are really trying to make sure they might be laundering money through the system, they might be trying to defraud individuals. That is a massive problem around the world. It's a very persistent problem. It's about a $3 trillion problem in terms of how much money is laundered through the financial system around the world. And the banks have been put on the front lines to try to solve this problem. And yet they cannot solve this problem by themselves. So what we talk a lot about, particularly in an event like this one, is the need for collective action. You've got law enforcement, you've got regulators, you've got the banks, and you've got technology companies. We are a scale provider of technology in this space, and it's one of our fastest growing business. We had 21% growth in the quarter, that's been the general growth rate of that business because it's such a huge challenge. So what we do and what we've been talking to regulators about is, number one, make sure the banks can share data, because sharing data across the banks, which is allowable here in the United States under certain laws, makes it so that we can gather up information, look at payor and payee information, look at topologies and patterns of practices of criminal behavior, and get a lot smarter in identifying those criminals, and then allowing the banks to be a lot better at trying to identify and get those criminals out of their networks, both preventatively and reactively. I think that the second thing is you've got to allow for the banks and the regulators to use AI to be very advanced in using technologies that, because all of the criminals are going to use those technologies. They're incredibly smart.
Isn't AI just going to be absolutely able to mimic the email that your aunt sends you asking? It was really targeted pitches.
Yeah, so I think that right now you've got, as you said, you've got these moments in time when disruption tends to kind of give rise to creativity, positive and negative. But what happens also with the use of technology is that the criminals are going to get better and better at trying to fool people, to fool the banks, to fool the system. And what we need to make sure as regulators, as legislators, as law enforcement, and as technology providers is that we are allowed to deploy the best technology available in the world to defend the system. And AI is obviously going to be a game changer for defense, in addition to being, unfortunately, a game changer for the criminals. So we are very advanced in the AI that we use within our Verafin platform, both in terms of identifying criminals and in terms of automating workflows so that you can actually be much more efficient in driving the solution.
But a couple of years ago, sort of one of the cutting edge customer ID tools was voice recognition. You could call and it would know who you were, and boy, did that have a shelf life of about 10 minutes, right? I think a lot of the AI generated stuff is just, it feels like it's advantage criminal at the moment. How do you think about it?
Well, I would look at it this way. It's quite insidious, like the way that they can try to gain entry to your life, try to kind of pull on your heartstrings. So, the ones that are just, there's so many terribles that you see within the world of financial crime. But the ability to trick a person by using, let's say, an elderly person who's recently lost a spouse. They're lonely and they're afraid. And the obituary was in the news, right? So unfortunately, they are an incredible target for scammers. And so they then, and oftentimes they're not as technology savvy. And so they can kind of they can get targeted in a way that's really, it's just terrible to see. What's really great though is you hear great stories. I have to say, you do hear great stories from the banks where they teach their tellers, just if someone is coming and suddenly wanting to make a major withdrawal, they have been taught and taught and taught, do not allow that to happen until you ask like 100 questions. I mean, and maybe for you all, as you're going into the bank and trying to make an unusual withdrawal, you're like, gosh, why are they asking me so many questions? But they're doing it for all the right reasons. But that's the kind of thing, that training that happens on the ground. But it also has to be behind the scenes. When that wire comes in, we have to be able to stop that wire. We have to be able to make sure that at the end of the day, systematically, we're also able to block those types of bad transactions and make sure that these criminals just are not successful.
You operate markets all over the world, particularly in Europe. It's a bit of a moment for Europe. It outperformed the US and sort of in the stock market this year, seeing a lot of industrial policy and government spending and some interesting things. But a real competitiveness problem, right? This is what the Draghi report last year, and you see it, I imagine, particularly in, you look at the number of startups coming out of Europe, and even the ones, Spotify, I believe, when it decided to go public, came to New York. So when you, particularly your experience, I think, in the Nordic countries, like what you see, what European investors need to do to build the kind of capital markets that would let them kind of keep their national champions and really compete for capital? Yeah,
so just to take a step back, so I mean, if you think about the European Union, it is a huge economy. There's 100 million more people that live in Europe, but then it's just a huge economy. But at the same time, it has just a slower growth profile. And the capital markets are not as deep and liquid as they are in the United States. Now, there are a couple exceptions to that, and I would say that we're very proud to be the owner and operator of the markets in the Nordics, and in particular in Sweden. Small country, very outsized weight in the world, right? It's this country of about 10 million people. But what's really interesting when you look at that country is why the markets are deep, the markets are liquid. We've had I look at things in the span of my tenure as CEO. So in the last 8 years, we've had 450 companies go public across the Nordics. And that's a great testament to the innovative spirit of the Nordic countries. But why is that? Like, why is that? I mean, it's almost as many as has happened all over the rest of Europe, right? So, and it's not because of us. I mean, it's partly because of us, we'd like to think. But let's just say it's a part of. There's a lot that underpins that. Number one, the country decided, decades and decades ago, that for them to be an outsized weight in the world, they had to be a major international exporter of their talent and of their capabilities. So they grew these really international businesses, and they're very global in the way that they've expanded their businesses, number one. Number two, they have a great university system. They invest a lot in technology, in research and R&D. They have a great system that underpins that, but they have an innovative spirit. Then they also have been really encouraging everyday citizens to be investors in the equities markets. And in 2012, they launched a program that really changed the game there. That is it's a total exemplar for the rest of Europe. They launched a program called the ISK program, which allows investors to invest up to about $1 million into a savings account where they only get taxed 1% of the total value of the account, no cap gains tax at all. And all their only requirement is that they invest in public equities. So the ownership of equities in the country literally just went straight line up from there. And so right now, the United States, 36% of household assets are invested in equities in the United States. Sorry, 39%. In Sweden, it's 36%. In the rest of Europe, it's less than 20%. And so it's a really interesting, I think, kind of true test case or case study in how a medium-sized economy can have a great capital market when you are very intentional about programs. And then, of course, they also operate with very advanced technology in their markets. I think that we really do focus very much on market structure that is retail-oriented. They have a great pension system, and the pensions are very good at investing in domestic equities. So that flywheel effect is really special. The Draghi report actually calls it out as being kind of how can we look within our own continent and realize that there's a way to succeed. So we've been very engaged with the regulators and legislators across Europe to talk about how do you expand that? How do you change the culture? How do you change and make sure that innovators feel like that they can innovate, they can fail, they can try, fail, try again? How do you kind of change all of that and also focus on the plumbing? And the markets they're very, very efficient when they, in general. I think that there's some inefficiencies on post-trade side. There's some inefficiencies in some of the regulatory infrastructure, but there's also a cultural change that needs to happen.
Do you think this could be a galvanizing moment? We've seen pressure, for example, for Canadian pension funds to buy Canadian. Is there an opportunity here for a bit of a, I don't know, like an anti-US kind of rally among Europe to invest in their own companies, to stop sending so much of their capital here?
Oh, at the end of the day, I think investors always will follow the returns. I mean, and they, whether you're a pension, any sort of public pension has an obligation to their pensioners to make sure they're getting returns. But the fact is that Europe is, it's an amazing economy. It's a matter of just catalyzing the economy and giving them the opportunity to find those returns within their continent. And in Sweden, the Swedish pensions are they're very domestically focused, but they also have great companies to invest in.
But is that always true, actually? I think because we've seen some investors do some non-economic things over the last couple of years, mostly for political reasons, where they've chased, ideology instead of the last nickel of returns. Is that the world we're living in now?
My father was an investor, and he was an investor his whole career. And I think that the thing that I've always learned is that that fiduciary duty is what's going to ultimately drive behavior. There can have some, it seems that he always said that companies always revert to the fundamentals over time, right? So like the valuations always revert to fundamentals over time. I think investors also ultimately they will go to where the returns are over time. And it's a matter of just making sure that the US economy delivers those returns, the European economy delivers those returns, and just driving economic growth and opportunity and expansion is the best way to make sure that people invest in your country.
Well, thank you so much for the time.
Great, thank you.